Hello, everyone. This is Mohammed Akif. I am with Akif CPA. I am a Texas CPA, also a chartered accountant in Ontario. And today we'll be discussing the Canadian TFSA, also what is the equivalency on the US side, and then the how the contribution works, how the withdrawal works for the Canadian TFSA, and the equivalency of that account on the US side. So before we get started, I do want to point out one important information. This is for Canadians who are looking to move to US with TFSA accounts to talk to a professional, to talk to a cross-border professional or any tax professional before you move to US. Because the US IRS does not have any regulation in terms of the TFSA account, even though on the Canadian side, it is an after-tax account, which and then also any withdrawals are all not taxed. That is not the same on the US side. So make sure that you do talk to a CPA because or tax professional because it gets complicated. The type of investments that you have in that account are taxed. The income that you have are taxed. So and then depending on the state that you move into, that also plays a role. So make sure that you talk to a professional. Make sure you plan ahead before you move. Make sure that the first year of taxes, if you, in my humble opinion, that you don't do it on your own. Make sure that you hire someone to help you with the year that you move to US, to help you with the Canadian taxes, to help you with the US taxes, because it is a messy year. It is a year with complications. It is a year where you can make certain decisions to simplify your taxes. I don't want you to be in a position where a complicated situation goes from one year to another year into another year. And then the Canadian tax, the CRA is a much more robust system that they do have. They do get into detail more. The foreign credits are much more to get. So these are a lot of things that do come into play. Make sure before you do some planning before you move to US on any visa. That could be HLE, or any of the visas that you're planning to move. Make sure even sponsorship, family sponsorship. Make sure you talk to an accountant. Make sure that you are able to consolidate. Make sure you're able to plan. Simplify your taxes before you move to United States. It is very important because U.S. form reporting. This is with the IRS. It's very rigorous. It's complicated, and then has a lot more bigger penalties than the Canadian side. So hire someone to help you the first year and then learn from them. Hire someone to help you the second year. If you can do it on your own. Make sure you understand what the filing requirements are. Make sure you know what you have. Somebody has done something for you. So don't do the first year taxes. Get someone to help you, and from there on, maybe you can pick it up on your own. So let's get into detail of the TFSA equivalency versus what is the equivalent account on the US side. So the Roth IRA is the equivalency of the TFSA. So any contributions that you do make in those accounts are all post tax. That means you have earned this income, you have paid tax on this income, and then you are contributing to these accounts. So any earning in those accounts are all after tax, so meaning then so that means there's no tax on this. Any distribution that you get will be non-taxable. So TFSA contributions at post tax, Roth IRA contributions post tax, earnings when they are distributed are not taxed either, are non-taxable. So both accounts have the same tax status in each country. So let's talk about the contribution limits. The TFSA contribution limits are on a annual basis, and then do carry forward the amounts that you have unused. So in some cases where somebody has a 8,000 contribution for one year, and then the 7,000 or 10,000 the next year, if they've only used 5,000, you will have 15,000 or 14,000 to carry forward into next year. Versus the Roth is on per year to year basis, and contributions don't roll over. That means if you are eligible to make the contributions, if you don't make the contributions, you lose them. And then you have if you have that account and you are eligible to make the contributions, make sure you do make the contributions. On the US side, we also have income limitations. So if you make certain income above the threshold, you're not allowed to make contributions to the Roth account versus the TFSA. There is no income limitation on the Canadian side. In terms of distributions, you can withdraw money from the TFSA account uh, without any problems. But on the US side, we do have a penalty. The account has to be more than 5 years old, and then you should be more than 59 and a half in terms of age to withdraw money without any penalty. So if you do withdraw early withdrawal, we do have penalty on the US side. That is not the case on the Canadian side. The Canadian side, you can withdraw money and close the accounts without any problems, but that's not the case on the US side. For US side, in order to avoid the penalty for early withdrawal, the account must be maintained for at least 5 years and your age should be 59 and a half. We do have certain exceptions in terms of the penalty to be not applicable to you. Those can be discussed in a separate video, but we do have exceptions that you can meet. If you do meet that, you can withdraw the money without getting penalized. So this is the difference. This is the equivalency of the Canadian TFSA versus the US Roth. I do want to point out the TFSA, we don't have any regulation for the TFSA account on the US side. So any earnings that you do have in the TFSA account get taxed on the USA, even though you are not a Canadian resident. Let's say if you have moved, US has the right to tax you. You still have to report the income. And then you also have to report the investments in those TFSA accounts. In some cases, if they are in mutual funds, Canadian mutual funds or Canadian ETFs, those will be reported on PFIX. These are considered passive foreign investment companies, which are reported on a separate form in the US. So make sure that before you move, you simplify some of the accounts, consolidate some of the accounts, do some planning before you come to South in the US to work. Before you're doing this, you can save a lot of headache, a lot of penalties, a lot of stress. Make sure that you are able to talk to someone before you come. So if you have any questions before moving, reach out to us. We'll be happy to help you and then get you in a better place